When the going gets tough, the tough get going. It is this very belief that has helped us rise from challenge to change. When businesses across the country were facing the unexpected challenges of COVID-19, Yes Bank had to face the biggest challenge of them all. Yes Bank was put under moratorium in March 2020. The Government of India, in consultation with RBI and support from SBI and other private sector banks, initiated the reconstruction scheme for Yes Bank. The first step in this journey was the appointment of Mr. Prashant Kumar as MD and CEO, who at that time was the CFO and Deputy Managing Director of State Bank of India. Under his leadership and guidance, the board's immediate priority was to restructure the organization with focus on compliance, governance and building transparency, with special attention on operational efficiency, separation of risk and credit, improve the corporate retail mix, and introduce a new credit structure where large scales were approved only by the Bank Credit Committee. It was the board's strong belief that the comeback story of Yes Bank would be built on this renewed ethos. Under the leadership and guidance of the board, Yes Bank raised 15,000 crore rupees in a follow-on public offer in July 2020, our first step towards the turnaround. This was India's largest fundraise in the financial services sector and a testament to the efforts of the leadership and faith from our investors. And after this, Yes Bank started delivering one win after another. In September 2020, Yes Bank repaid the special liquidity facility of 50,000 crore rupees well before the due date. In 2021, the bank initiated a holistic cost transformation program and implemented over 400 crore rupees of annualized recurring savings. Yes Bank turned over a new leaf in June 2022 within just 2 years of entering the reconstruction scheme. We returned to profitability with a profit of 1,066 crore rupees in financial year 22 against a loss of 16,418 crore rupees in financial year 20. The cheer within the investor community was palpable, and this was made possible by the single-minded focus of the board. Along the way, Yes Bank ramped up its digital capabilities and maintained its leadership in domestic UPI transactions with 43% market share. We are proud to share that today, every third digital transaction in the country is processed by Yes Bank. Our efforts resonated with our customers and helped us regain their trust. This resulted in 3 lakh CASA accounts, which were opened in the first quarter of the financial year 22-23 alone. The bank continues to improve its financial performance through diversification of income streams and has achieved a 60-40 mix of retail and MSME to corporate advances. The Reconstruction Board achieved its objective within 2 years and formed an alternate board in July 2022. The story of our turnaround continued with Yes Bank signing a binding term sheet with JC Flowers for sale of identified stressed loans of 48,000 crore rupees, which drew global investors like Carlyle and Advent to invest 8,900 crore rupees. Our journey of transformation was validated by Moody's, who adjusted the baseline credit assessment to B1 from B3, and our CRISIL ratings were upgraded to CRISIL A- and A1+, with outlook revised to positive. The successful evolution of Yes Bank in such a short period of time is a unique example of perfectly coordinated action by the Government of India, Reserve Bank of India, State Bank of India, other private sector banks, the board and the leadership team. Today, when we look back, we acknowledge that it is only with the right leadership that vision can be translated into reality. Together, we can proudly say that we have not just challenged the status quo, but redefined it. We are a redefined Yes, and we are poised for growth.